Thanks for staying on. This is, of course, the second panel of the day. We're still on the theme of investor protection and trying to understand a little bit better about the recourse you can take just in case something went awry on your investments. This panel will discuss scams on the rise and how to protect your investments. Over the next 1.5 hours, you're going to be listening about some ideas of what constitutes as an investment fraud, the various tactics that is being used to scam you, the investor, and more importantly, where should you seek help and where you should report misconducts and what recourse do you have as an investor. We have a very strong panel for this afternoon, four actually. We have Puan Regina Rahim, the Managing Director and Country Head Malaysia of Nomura Asset Management. We have Mr. Chung Yiwa, the Senior Vice President of Strategy and Solutions at AmInvest. We also have Puan Sahlawati Mustafa, the GM of Regulatory Services Division at FIMM, as well as Sharmila Sharma, the CEO of SIDREC, or the Securities Industry Dispute Resolution Center. Here to moderate this event is Ms. Coy Swilian, Board of Director at FIMM. Ms. Coy, over to you.
Thank you for the kind introduction, Encik Ibrahim. Good morning, everyone. Welcome to this session on Scams on the Rise, Protect Your Investments, which aims to provide guidance to participants on how to avoid investment scams and protect your investments. Ladies and gentlemen, this session will be divided into 5 segments with presentation by Puan Salawati, another presentation by Ms. Sharmila Sharma, and followed by interactive discussion with Ms. Regina Rahim and Mr. Chung Yiwa. This will be followed by Q&A and finally the key takeaways, which will bring us to the conclusion of this session today. To start off the discussion, I would like to share with you the recent investment scam reported by the Star on the 28th of September 2021. Slide, please. Thanks for the slides. A total of 629 investors lost about 12 million after investing in a Forex scheme operated by a company based overseas. Investors couldn't withdraw their money when they logged into the company's website. At that point, when the website has disappeared and middleman is reportedly overseas and uncontactable, investors lodged police reports. The Deputy Public Prosecutor's Office classified the case as no further action after the police investigations because there is lack of evidence. With these investors, will these investors ever see their money again? Now, next slide, I will show you the red flags involving this get-rich-quick scheme. Forex trading, unless it is with licensed banks licensed by Bank Negara, it is illegal. So do not be tempted to get involved with illegal Forex trading. They promise you phantom returns, huge returns. But these returns are shown to you online. You may not be able, most of the time you are unable to withdraw your money. Scams commonly start with a small initial investments of between US 1,000 or 3,000. After seeing the high returns online, investors are persuaded to invest more and more, but are frustrated when attempts to withdraw from the investments fail. Lack of documentation. We are advising investors to keep the payment slips, receipts as proof of transactions, because in the case I mentioned earlier, the police couldn't investigate because there was not enough documentary evidence. This scam reminds me of a friend who happily confided that he had invested 20,000 with an operator in the same town. He didn't ask for a receipt because the operator lives in a big house, has expensive cars, and was known to have bought branded watches worth a few 100,000 ringgit. That's enough to convince the town folks to part with their life savings. And in this case also, you'll find that there is unregulated middlemen. Scams invariably involve good-intentioned friends and relatives introducing you lucrative money-making investments. These people are not regulated and properly trained to market and promote investment schemes. So the advice is go to the unit trust industry for your investments and see your money grow. The scheme operator was purportedly overseas. It is difficult to establish the identities of overseas operators, which may be a $2 company registered in offshore center. Investors of unlicensed operators abroad cannot seek the assistance of the local regulatory authorities. With that contextual setting, I would like to start the session by inviting Puan Salawati to share on the role of the Federation of Investment Managers Malaysia. Over to you, Puan Salawati.
Okay, thank you, Madam Koi. Thanks for the slide. Assalamualaikum and a very good morning to Madam Koi, fellow panelists and all of you who are present in this virtual event. I'm going to start this session with a little activity which require all of you to participate. I call this as Speak from the Heart activity. So this is what I want you to do. Please put your hand on your heart like this. Close your eyes. And what I want you to do is answer truthfully to my 3 questions. Do you want to be rich? Do you want to be rich quickly? Do you want to be rich in the easiest way? Now, open your eyes and put your hand down. I can see that even the panelists are smiling, and their smile gets wider as the questions being posed. Some of you are even nodding your head to reaffirm the answer. Well, yep, that's you. Let me tell you this. If you answered yes to either one or all of these 3 questions, you are susceptible to being prey to the scammer. And you are at the right forum. And this is because the scammer usually latches on your desire and emotion. Now that we have established this point, let's begin the presentation. On to the next slide, please. Next slide, please. Okay. So this, probably we can go to the, just keep this slide and then move on to the next one. Okay. In this slide, what you are seeing are snippets of news on scams that are lurking out there. And these are only news that are picked up randomly online this year. So I think Madam quite covers the first box when we talk about the investors who lost 12 million in alleged forex earlier on. The famous Macau scam was appearing in a lot of news, recently. And also we have news about a scam relating to cyber crime fraud. And this is at the moment topping the scam chart in Malaysia. As well as investment scam, if you look at the returns that are being promised, 100 to 400%, that's really far-fetched, right? And not to forget the love scam. Ladies, please don't be a part of the statistics. And if you look at the last box, we talk about e-commerce. This is where people fall prey for bogus employment that were actually published on the e-commerce platform. So now, looking at this, there are so many types of scams that are being reported on the news. And yet, there are still people who succumb to that. Why? It goes back to the point that the scammer plays on your desire and emotion. And your chance of getting scammed is higher if you are gullible. In terms of managing your desire or emotion, when faced with the dilemma, ask yourself the following questions. It is a common question, which is not a surprise to all of you. So if you look at returns, you just ask this question. Is it too good to be true? If it is, there is a high chance that the investment is a scam. If you are pressured to invest, Ask yourself this: do I really need to decide now? Perhaps you may want to give yourself some time and conduct your own due diligence. You can use various methods, even getting Pakcik Google to help. So as far as helping gullible investors, now, this is something that we at FIMM probably can do to help. For that, I'll move on to the next slide that highlights the roles of FIMM in the investment ecosystem. So as you know, FIMM is an SRO that is recognized by the SC in 2011. Please visit our virtual booth at FIMMAC to know a little bit more in terms of our roles and responsibilities. So essentially, we can move on to the next slide, please. We are focusing on regulating marketing and distribution of unit trust and private retirement schemes, and it stops at that, right? So in terms of the roles that we play two roles. One is as industry representative, and the other is to act as supervisor for companies whom we call distributors or individuals who are also known as consultants in respect of their activity selling the unit trust and private retirement schemes. So in essence, anybody or any company, even though they are licensed by the SC or Bank Negara, if they want to sell the schemes, they have to come to FIMM for registration. So these slides that I have shown, that are being shown at the moment, provided a bit more granularity in terms of what the roles of FIMM is. So it varies from investor education up to the point of the enforcement activity. So let me touch a little bit more in terms of the enforcement, because I think that's key as well. So when we look at enforcement, what we do is we take disciplinary action on any misconduct or misbehavior by those who are registered with FIMM in respect of selling the schemes. The key word here is we can take action in respect of misconduct. We can't do restitution. We can't get the money that you have lost back for you. So we leave that part to either the SC or Bank Negara. And if your loss relate to authorized investment product, you may refer the matter to SIDREC, which you are going to hear about it in more details from our next panelist, Ms. Shamila. So then you may ask, how would FIMM help gullible investors? Let's look at the next slide, please. Okay, so these are the investors' education that we have actually done, and we are going to continue to do it. So if you look at this, we are quite active on social media. So these are some of the addresses, so there's no excuses that you don't know our social media addresses. Please follow us. There's so many things that we post on those social medias, including, cost averaging, what it is, risk of investing using loan, 101 on investment, beware of scams, etc., etc. So this will provide you some baseline or a starting point to know a bit more about investment in schemes. And best of all, it is free of charge. So we also collaborate with various parties in our efforts to educate the public, the SC, Financial Education Network, MFPC, to just name a few. So what we are trying to do is to be more holistic in our reach, covering those from younger generation to the more mature generation. So we even produce e-magazines and online TV as part of our effort in educating the public. At the end of the day, it is up to you whether you want to unleash your gullible state, bak kata pepatah, tepuk dada tanya selera, or di mana ada kemahuan, di situ ada jalan. So to emphasize the importance of knowing about investment, I bring to you a very simple case study relating to unauthorized investment and the identified red flags. On to the next slide, please. So this case study relates to investor who invested in an overseas product of company X that was introduced by a consultant who was registered with FIMM. And that's the reason why this case came to FIMM. So the next slide, please. So if you look at the whole case flow, this product and company X are actually not approved or registered with the SC. So as you know that if you want to sell capital market products, you have to go to the SC for some kind of approval or endorsement. So this then make the product and the company as unauthorized product and unauthorized company. Red flag 1, So prior to concluding the sales, there was no documentation provided on the product. Everything is explained through using online platform. And it was alleged that there was a representation that the fund will provide a consistent return of 8% over 3 years. So red flag 2. So in concluding the sales, there was also the investors actually transferred the money to the consultant's account. So red flag 3. So as you can see, there's a bit of trend here. You know, the fact that you use cash to invest and give it to the consultant or the individual you are dealing with, and the fact that you actually transfer funds to the consultant's account, which is similar to the case that was highlighted in the earlier session as well. And if you were to do a simple check through just a normal web check, you will find the following discrepancies or anomalies. So one is that the company's website did not even state common information that you expect of a company that should be made available. Contact information, board members, information on the product, etc. So this becomes a red flag 4. The company X even was listed in the adverse list records in the home jurisdiction. So it was a red flag 5. So everything doesn't seem to work well for these investors. And to no surprise, the sad ending is the investors lost their money. Police report is being lodged. So next slide, please. So if you look at this, if you compare this in a legitimate investment environment, next slide, please. Okay. So this is, if you look at it at the pre-sale, that means before you are actually committing to do the investment, there are certain things that you need to be aware of. So at that point, you must make sure that the person that you are dealing with are actually having a valid license or registration. So this is, I think, is going to echo throughout the whole session. So I call it as KYC. And you also must be mindful of the halo effect of regulation. So what does it mean? What it means is that just because the person that you are dealing with is, for example, a unit trust consultant who are registered with FIMM, you must understand that their registration only relates to selling unit trust scheme. Therefore, you cannot assume that this particular consultant can sell or authorize any other product other than what they are authorized to sell, which is in this case, the case study that I mentioned earlier on, that consultant wasn't authorized to sell product that was issued by Company X, right? Okay. And if any consultant who buys or sells unauthorized product, because I understand that we have consultants that are also joining this session, I just need to let you know that this is a misconduct under FIMM's Code of Ethics and may subject you to disciplinary action. So you've been warned. Okay. Secondly, if you conduct own due diligence on the product, you can use Pakcik Google if you want, which is quite simple. Now information is at your fingertip. You can see that you can see whether the product is authorized by the SE or not. Yeah. So additionally, you must also understand the nature, the risk of the product, as well as fees and charges involved. Do not just focus on the returns, because fees and charges, it can be, even at the exit point, there are some charges that will probably incur. But of course, not all products like that, but you just need to be aware of those. And lastly, if you decide to invest, you must also be prepared to see whether it meets your investment risk appetite or objective. If you're not comfortable on the outcome of any of these points, you may want to reconsider on whether to proceed with the investment. If you are comfortable, let's look at what you need to look at the point when you are concluding the sales, which will be covered in the next slides. Next slide, please. The one before that. Okay, thanks. So at this point, which is the point of sales, you must make sure, and I can't emphasize enough, do not give cash. Do not transfer your money to an individual account. And as you can see from the case studies, the money was transferred to an individual account who purportedly transferred to Company X, We do not know whether the whole amount was transferred as the money trail becomes diluted as it goes beyond Malaysia's soil. Also, a lot of investors do this. They do not fill up the relevant information, including the date, in filling up a form. The tendency is you just sign on the place that marked X. You know, I probably am guilty for one. And remember, there is a price to pay for convenience. So another point again is protect your personal information. So how many of you didn't cross your IC when you submit your investment application or account opening, etc.? In this era, data is king. You do not want people to steal your identity. But last but not least, make sure that you obtain copy of the relevant forms and receipt. Just to echo what Madam Quat has said earlier on. The next slide highlights some of the things that you need to be aware at post-sales. Yeah, this is at the point where you have concluded your transaction. So first thing is, you must obtain confirmation or statement from the company to confirm receipt of your investment. Some of you receive your investment statement, but don't bother to check. Please check it. Do check it to make sure that the information is accurate. Lastly, if you change your personal information, do advise the company, do advise the consultant so that it can be updated accordingly. So this is to ensure that you receive timely information on your investment. If you remember the case study that was mentioned in the earlier session, they were talking about, someone changed your information without your knowing. You probably want to check that with the company, on a regular basis or on some periodic basis in case you did not receive any information about your investment. Just want to see whether, for whatever reason, your identity has been compromised. These are just simple guide to you when you decide to invest in a unit trust or private retirement scheme. I hope that you find it useful and informative for your reference. So actually I have I have additional slides towards the end, but these are just useful slides. Probably we're just going to click on it one by one quickly. Okay, the slide is moving. Okay, so these are the useful links which I thought that will be helpful for everyone that's present here. The slides is going to be given to you. So essentially, I break it down into two aspects. One is to check and verify. This is where you check the license status or the registration status of the person that you are dealing with on whether they are authorized or not. The next slide also the same. But I've already included something about FIMMAC mule, which was also mentioned earlier on in the next slide. This is how the website looks like at the moment. If they change, just make sure that you go to the correct link. These are the useful links where you can find all the alert lists in terms of adverse news or adverse lists that have been maintained by both regulators, the SC as well as Bank Negara. And last but not least, if you fall victim to any of the scam, please lodge your complaint. And these are some of the links that will be useful to you. Be mindful of the issues that you are complaining, because each regulator will focus more in terms of what they are regulating, the product that they are regulating. So with that, I'm going to pause for a moment, hand the session back to Madam Quat. Thank you.
Thank you very much, Puan Salawati, for the informative presentation. Referring to this slide on useful links reminds me of a neighboring country's citizen, our neighbor down under. The citizen applied to migrate to Malaysia. This is so unusual because it's normally the other way around. The perplexed immigration authority then was prompted to ask this applicant, why do you want to migrate to Malaysia? She replied that in Malaysia, I can complain. So this person came from a country that there's so fine, and that there is no chance to complain. Next, without further ado, let's have Ms. Shamila to present on SIDREC's role in mediating monetary disputes involving investments. Shamila, please.
Okay, thank you, Koi. First of all, may I thank FIMM for inviting Sidrat to be part of the many excellent conversations on the next normal. A warm welcome to Koi as the moderator, Salawati, Regina, and Iwa. And to the audience, thank you very much for participating in this session and for your time in understanding SIDREC and the services that we offer. Can we go to slide 4, please? Information on SIDREC is contained in retail product highlight sheets. The one before that, please. Product highlight sheets and investment statements. However, awareness of SIDREC among retail investors remained low. We conducted our first investor awareness survey in 2019. Only 18.5% of the 10,000 plus respondents have heard of us. We are currently conducting our second investor awareness survey. As of now, findings from the year's survey indicate a lower rate of awareness of SIDREC and our services. A core aim of our investor awareness program is to ensure that retail investors are aware that SIDREC exists should they require assistance before the need for such assistance even arises. As such, through my presentation today, I will try and address some of the common questions that are asked of us. I will also share some of the key observations from SIDREC's cases that I think are likely to remain relevant regardless of the times we live in, be it in the current, new, or next normal. Next slide, please. On that note, let's start at the very beginning. What is SIDREC and what do we do? SIDREC is an independent and impartial dispute resolution center established by the Securities Commission Malaysia. We were officially launched a little more than 10 years ago to handle monetary disputes between retail investors and financial service providers who are SIDREC members. Our services are free for retail investors with monetary claims that are below 250,000, while a reasonable fee is charged for retail investors with monetary claims that are above 250,000. Before retail investors can file a claim with SIDREC, however, they must first file a claim directly with their financial service provider. Why is this necessary? The reason, it is to provide an opportunity for retail investors and their financial service providers to come together to try and resolve the dispute among themselves first. Through this exercise, it is hoped that both parties will understand each other's perspectives better, foster better relationships, and smoothen future dealings between them. Next slide, please. I had mentioned earlier that SIDREC handles claims between retail investors and financial service providers who are SIDREC members. So who are SIDREC members? SIDREC members include banks and Islamic banks, fund management companies, stockbroking companies, unit trust management companies, and private retirement scheme providers and distributors. We currently have 193 members. You may find the full list of members on our website. A frequently asked question is whether SIDREC can handle monetary disputes against an individual or entity that is not a SIDREC member. Unfortunately, the answer is no. We can only handle investment-related monetary disputes involving one of our members. This is why it is so important for retail investors to deal with licensed financial service providers. Your interests as an investor is far better protected that way. You are also less likely to fall prey to a scam. Next slide, please. Apart from being able to handle monetary claims that involves a SIDREC member, SIDREC is also only able to handle claims involving certain capital market products and services. This includes shares, unit trusts, derivative products such as structured products, and private retirement schemes. What SIDREC can or cannot handle may sound a bit technical, but let me assure you that we are here to help. As such, I would like to stress that any individual investor who believes that he or she has an investment-related monetary dispute with their financial service provider, to please feel free to contact us to find out if we may be of assistance to you. Next 2 slides, please. So how does SIDREC assist in resolving monetary claims between retail investors and SIDREC members? I will not go into the details here today, but instead would like to invite you to visit our booth at the exhibition hall and have a chat with one of our representatives who will be more than glad to assist you. However, just broadly, Sidrat provides 3 types of services: case management, mediation, and adjudication. Case management is handled by Sidrat's in-house case managers. Currently, we have 1 head of dispute resolution and 5 case managers. The majority of our case managers are certified mediators. Mediation and adjudication are handled by Sidrat's panel of mediators and adjudicators. Despite our services being free of charge for monetary claims below 250,000, the panel actually comprised of very senior practitioners in both the legal field and the capital market. At mediation, the parties meet with the mediator present. Any settlement reached between the parties are fully voluntary. The matter will proceed to adjudication if mediation is unsuccessful. At adjudication, there will be an adjudication present who will hear the case and will make a final decision on the matter. Next slide, please. Next slide, please. More than 90% of Sidrat's cases are settled at case management and mediation. This means that the majority of our disputes have been resolved through both parties coming together and hearing each other out instead of their dispute being resolved through a Sidrat panel member deciding on the case. Next 2 slide, please. So what types of cases does Sidrat typically handle? We categorize our cases in 3 broad categories: market conduct, service standards, and members' practices and policies. As the topic of this session is on scams, I will focus on market conduct related cases that we handle. Market conduct cases involve fraud, defalcation or misappropriation, mis-selling, and unauthorized transactions. Next slide, please. Since its inception and up until 2016, we saw a rise in market conduct related cases. In recent years, however, market conduct related cases among Sidrat members have fallen over time. I would like to pause here for a moment and contrast this downtrend in market conduct related cases that we received at Sidrat in the recent years and the parallel trend of scams being on a rise of late. At the SE's InvestSmart conference, the SE chairman alerted us that the SE had received more than 2,000 complaints and inquiries on financial scams between January and September this year. This more than doubles the numbers of previous years. These financial scams typically involve unlicensed persons or entities, promise high returns with little or no risk at all, are promoted over chat groups and social media accounts, and require payments to be made to new bank accounts. The 2 contrasting trends stress the importance for retail investors to deal with licensed financial service providers. This is not to say that you will not fall prey to a fraud or scam if you deal with a licensed financial service provider, but you may have recourse should you find yourself in the unfortunate circumstance of being a victim. Next slide, please. This slide illustrates the breakdown of market conduct related cases that Sidrat has handled since its inception. The majority of cases involve around sales practices, but as you can see, about 30% come from some form of fraud, defalcation, or misappropriation. Next 2 slides, please. So now very quickly, just some key observations from Sidrat's cases that I think are likely to remain relevant regardless of the times we live in. First, do verify that the financial service provider is registered under or licensed by the relevant authorities. Second, do deposit money directly with your financial service provider and in their authorized account. Do not hand over cash to your remisiers, unit trust consultants, or other agents, or deposit money into their personal accounts. Upon payment, do insist on payment receipt and confirm the statement for details of all transactions effected. For example, contract notes if it's shares, daily statement if it's derivatives, or statement of transactions if it's in relation to a unit trust transaction. Do be alert for red flags relating to fraud or scam. These have been mentioned many times by Koi as well as Salawati, but let me highlight them again. These red flags include aggressive, persuasive tactics, investment sounding too good to be true, being pressured to make a decision, or being given extraordinary expensive gifts. Just remember that no investment returns are guaranteed. Finally, be wary of sharing your bank account, credit card, or online transaction account details with anyone, and be wary of taking on board investment advice or tips promoted through social media channels by unlicensed investment advisors. Next slide, please. So here is how you lodge a claim. You can lodge a claim with SIDREC. You may go to SIDREC's website, download a copy of the claim form, and submit the form to info@sidrec.com.my. Someone will definitely be assisting you very quickly. For the next couple of days, you may also have a chat with our representatives at the exhibition hall. Next slide, please. Next slide. Yeah. You may also call us at 2282-2280 or follow us on social media platform. And with that, I thank you for your time. Back to you, Koi.
Thank you so much, Ms. Shamila. Firstly, in your slides, you also remind all the participants that they should be investing with companies that are registered or licensed by the authorities. And for that also, in order to avail themselves of SIDREC's assistance in the event of any monetary dispute. Next, we have the third segment where we have Ms. Regina Rahim and Ms. Tumiwa to share on their views on investment scams, especially those relating to the unit trust industry. To start the session, this segment, I would like to share on 3 types of investment scams where the money invested does not go towards any real investment because the investment is fake. The agent falsely claims to represent an established investment company. It is real, investment is real, but the money you give to the agent does not go towards that investment. As scams are on the rise and everywhere, it can target you in your home. It is not a matter of if it happens, but when it will happen. So then my first question is to Ms. Regina. Can you share with us the rampant use of emails promoting unauthorized investments and Ponzi investment schemes? Ms. Regina?
Hi.
Hi, please go ahead.
Hi, thank you, Madam Coy, and thank you, FIMM, for this opportunity to be on this panel. In regards to your question, Madam Coy, I think, one of the key things that we have to be very mindful of is the fact that the level of sophistication of the scams nowadays is extremely sophisticated, and we really need to be very, very aware. What I've seen personally is in regards to, I think the previous speakers had talked about double checking on whether or not the fund house or the investment fund is coming from an authorized or licensed entity. We have seen in the past 2 years, especially since a lot of us are working from home, what they are doing is that there is a replication of a licensed entity's website. So they claim to be actually coming from, so let's say Nomura or any other house. And so, but there are little triggers that you must always double check. And so this is where, it's very, very targeted. So they would actually use the brand name of, let's say, Nomura, but they will have maybe instead of .com.my, they might just say .co or .asia. So it gives that sense of credibility. But I think the key thing to always look out for is the fact that the kind of returns that they're promising. So that would be one way of looking at it. But another targeted email scam that we're also looking at, apart from the replication of a website, is that an email will be sent to a particular person, and it's usually purported to be either a known person or a senior person. So let's say if I'm a managing manager in a company, I will get an email from purportedly a boss from overseas asking me to do something to transfer the money, knowing full well that I've got authority to actually do the transfer, and so therefore, but you will always see that the mode is always that time is of the essence, right? So they want you to act very, very fast. So they're not going to give you time to think, and they always say, okay, this is a secret or whatever, but you don't need to verify with someone else. You need to execute this, and you need to execute this now. So chances are those email addresses has been replicated or hacked. But sometimes when you reply to that email, the true email will come out. So even though the normal email would have been like xyz@nomura.com or whatever, but when you reply, it suddenly goes somewhere else. Then you know that technically this is not correct. So that's one of the key things that you have to be very careful for. I have also heard and known that, payments are processed because you would have thought that it's coming from a client asking for a redemption, for an example. But the key thing is to see whether or not it's an authorized signatory that's actually sent that request, and also where is that money going to. So if there's a sudden request to say that, they have to send that monies to a third party account, that's also another trigger, right? And then going to your question about Ponzi schemes, I think what we are seeing of late in the market is targeting, especially for the high net worth individuals, agricultural funds, right? And now obviously we've got a lot of ESG related funds being marketed and all that. So it actually does play in terms of that thematic thing. But what's really interesting is that also these agricultural funds, I've seen lemongrass, I have seen mangoes, I have seen all sorts of things. But I think the key thing that you will always see is that there's always the modus operandi will be the fact that they will ask for, quite a high number of, a minimum investment amount. So it's maybe between 100,000 to $1 million. And there is a lock-in period. So you have to be very, they will say that, oh, you can't go anywhere. You have to lock in for a minimum one year. And then you actually get income distribution every quarter. So then you get that false sense of security, thinking, okay, I've made money. So even though the returns are, some of you might say it's not that high, it's not 400%, but it's 20 to 40% in a year, or even more in a year. So a lot of people, and because just like Salawati had started the session by saying, do you want to get rich? Do you want to get rich quick? And do you want to find ways to get rich faster, right? So it plays to emotions of the potential investor. So that's where then people will come in. So a Ponzi scheme, it might not look so obvious, but basically because you have been receiving some form of income distribution for maybe 3 or 4 quarters, then you start talking to your friends and say, oh, I've already made 40% this year, come in. So those who would have come in early, you would have made money, and then you're thinking, okay, I'm safe. But then you've got your friends start having coming in, and then that's when the issue comes in, because they're taking the monies from the later investors to come in, and then they pay you, right? So that's the whole issue with Ponzi schemes. So because sooner or later they're going to run out of monies to pay out. So the key thing for me is always to always question. So, and then always ask for the business model or the business plans of the underlying investment scheme. Because if the salesperson is unable to give you much color or clarity, then you know already that it's just it's especially if it's a hard sell, and they always say that time's running out, you've got to do it, and you got to do it now. Then you know that you've got to ask more questions. Thanks.
Thanks, Regina. My next question is for Mr. Chung. What are the other methods of investment scams out there? Can you share with us?
Yeah, sure. Thanks, Madam Koi. Thanks, FIMM. There's actually a lot of investment scams that's going on. I mean, the more obvious one is you get cold calls from people you don't know, promising you high returns. Social medias, you have people befriending you on Facebook. What is probably worse are all the dating apps. So you probably have handsome men, pretty girls befriending you, and before you know it, you get caught in a scam. Then you get all your private messages through your WhatsApp, promising very good return, right? So those, I think to a certain extent, most of us are aware, and we probably put some kind of caution when it comes to all those things, right? I think what is a little bit more difficult to defend against is like what Regina pointed out on the Ponzi scheme, i.e., because Ponzi scheme works in such a way that, it's through referrals, for example, right? So imagine if your cousin, your uncle comes and say, hey, why don't you invest in this scheme? And I have invested in it and I get return of 10% every month, right? Wouldn't you believe it? And before you know it, the whole family pool their money together because there's evidence that they actually get the money in, right? And as far as Ponzi scheme works, right, it does work as long as the underlying product makes money, right? So let's say, for example, I think the biggest example is in Malaysia is probably the Genoa gold scam, right? Yes. Between 2002 until 2011, gold prices went up from less than $300 per ounce to $1,800 per ounce, right? So because of that, it makes sense that, if you invest in it, the prices keep going up, people don't mind because you actually get the return, right? Even though, as long as you don't ask for the money back, right? All these scams fail is when the underlying product, let's say the Genoa gold case in 2011, when gold prices starts to stabilize, right? And people starts to want their money, then that's where the problem comes, right? So this all becomes a big issue, especially through this referral. And to add on to Regina's point again is, nowadays investment scam doesn't have to be small size, right? I have heard of, say, Musang King investments, right? You pay 350 ringgit in 66 days, they pay you back 500. Okay, you pay 1,500 ringgit, you invest 1,500 ringgit in 66 days, they pay you 9,000 ringgit, right? So the underlying product is always something that is always in value. So for example, Bitcoin, gold, Musang King, agar wood, stuff like that. So generally it comes back to the same premise that all of us spoke about earlier, that when the investment seems to promise you very good return in very short time, guaranteed return, and regular payment, right? Then everyone just have to be on their toes and be cautious about that kind of investments.
Iwan, that's all, is it, from you?
Yes, yeah.
Question. Oh, Ponzi schemes reminds me of newspaper advertisements a few years ago. I don't see them now. Inviting people to invest in certain land, growing certain trees, and the marketing point is you will get returns higher than your FD rate. And in this case, the growing trees, but in my mind, the trees need to grow first before they can have produced. And if that's the case, between now and the production of the oil from these trees, how is it that this company can give returns to the customers from the very beginning? So like what Ms. Regina mentioned, is Ponzi. It is the new investors' money is used to pay off the earlier investors. So I hope that has not continued to operate. The next question I have is for both of you, Regina and Iwa. Investors are advised that investing in unit trust is for the long term. But there is the investor who found that the value of her investments has decreased alarmingly to 50% of her initial investment amount. What should she do? Hold on to the investment or sell the investment? What would you advise her, Regina?
I think it all boils down to the risk appetite of the investor, yeah? So 50% to most of us would be very alarming. But if you're on a high risk spectrum, then 50% might be actually very palatable. So the question that needs to be asked is, before the investor was actually onboarded, was there a proper risk assessment? And I think that's very, very key because a lot of salespeople tend to just focus on the returns, and obviously it's past performance as well. So if you take 2020, for instance, everyone's going to say that, you're going to get double-digit returns and stuff like that. But if you look at the KLCI performance in the last few years and taking out 2020, you'll see that you're not going to have made much money, right? Especially after fees and charges. So it's always very important for you to assess the potential investors' risks first. So 50%, if you're talking about going into something like, cryptocurrencies, 50%, that can happen like within a week, right? But you can also be making, 800% if you had come in 2017, for instance. So it's all relative. So it always boils down to the onboarding process. And, investors need to also ask, if the salesperson is not asking them the right questions, they need to ask whether or not they're willing to take a loss. And usually most people don't like the idea of losing 50% of their money at any point in time. So the question is also, the thing is, they need to understand that product really, really well, because if it's 50%, and it's something that is a good investment, that would be, it's just in regards to climate change or something like that has caused the performance to take a downturn. But if they are long-term investors, then that 50% should be smoothened out, right? So it's not such a black and white answer. It really depends on the underlying investments first, as well as the appetite of the investor. I would not say immediately exit, because for some, there might be a cost to exiting as well.
Regina, you see, most investors, to attract their attention to invest in unit trusts, you just mentioned that potential return of 8%. They can remember that part, and the rest of it, they don't bother. So in this case, actually, after 50% loss, it went on for another 35% loss. This is the investment in unit trust. But I suppose it's also involving the case where it's an orphan investor. The consultant is no longer there. She doesn't know what to do, where to go. She should then call up the company, right?
Yes, definitely. Yeah, definitely. I think it also applies to investment-linked products for insurance. So you need to always, I think with any investment, you need to be consistently checking on your investments. It cannot be a case where you come in at one period and then 5 years later before you check, because that's also because then your potential salesperson would also target you, knowing you that you're not going to check on your investments. So that could also make you to be a potential prey. So yes, definitely call back the investment house. So which is why I always say, you need to see what the client onboarding process is, but there's also client servicing, right? So if you're not getting serviced by the salesperson because they've left, the beauty of going with an investment house is the fact that there will always be someone that's replacing. So if you're not getting notified that your salesperson has left, then technically you should be making that decision to double check on your investments and actually ask questions periodically and actually learn how to read your own client statements. And I think that's the key thing that people forget, right?
Yes. Investors need to keep learning. You cannot learn everything about investment in the unit trust industry after half an hour session or 1 hour session, because you have to build on your knowledge about investing in unit trust. And Mr. Chung, do you have anything to add on about this case?
Is that a real case, Madam Koi? 50% sounds terrible.
That was some years ago. Someone asked me the question.
I see. Well, generally, I think for the audience, if you take a high risk investments like equity, right? And if you compare it over the last 5 years, which I think is a good comparison, because in between we have COVID, and obviously everyone see the cycle come down, right? And of course we have rebounded. And I was just doing a quick check the other day in terms of investment return based on the index, right? The funny thing is, right, if you look at Asia Pac, for example, you get an average return of about 11% per year over the last 5 years, right? If you invest in US, the number is even higher, it's about 18%, right? And if you take Malaysia, right? Malaysia obviously did not do very well for the last 8 years. So Malaysia still give you a return of close to 3% per year, okay, which is not very good when you talk about investment, but it's still not a negative return. So when you have return of minus 50%, right? As an investor, I think the first thing you should actually do is know what you are investing, right? Because generally, if you invest in a proper portfolio that's well diversified, in most cases, you don't lose 50%, right? So when you lose 50%, it tends to be something that's very focused, very narrow. Like, for example, if you invest in Bitcoin, you could lose 50%. But normally over the long run, if the product has good fundamental value, you actually should see a return. So whether you should then divest of, I think the first thing the investor has to do is, if he or she can compare to similar product like they invested in, right, and see what kind of return. Say, for example, if the return is down 50%, but similar product is up 10%, right, on average. So obviously there is a management issue in that product. So that's something that they should look at. And if it's really a management issue, as in investment management of that fund is very bad, then I guess the answer is a no-brainer. Maybe they should look for something else, right? And I also second the point that Regina pointed out, that as investors, you need to know how much risk you are willing to tolerate, right? So a responsible asset management company is now guided by Securities Commission that, we need to know what is the client's risk appetite before we can take the client on. So to answer your question, it's not as easy as just saying, oh, that's a bad investment, but there's a lot more that needs to be done. Yeah.
That brings us to the point where the investor must continuously monitor his or her investments. And earlier the session earlier session mentioned that consultants must keep close to their investors. The same way, investors also must keep close to their consultants. Especially, I find consultants promoting and marketing unit trusts in the rural areas. They must remember their role. They are the leader, the king, the one who knows everything, the one I meant in the village. So the people there want to invest, and they look up to these consultants for their guidance. So you should play a role to help these people to invest in unit trust industry. Now, recently, I'm sure many of you have seen this WhatsApp message going around involving criminal breach of trust cases. FDs and the police are seen to be calling depositors to check on their FDs with the bankers concerned. Should investors check with their company regarding the investments, not only the consultant, but I think you have got access lines for the investors to call the companies directly, isn't it, Mr. Chung?
Yes, we do. Okay, so for, I think in this case, when there is any doubt, right? So companies like AmInvest, we feel highly responsible for the money that we manage, and we believe that we have a duty of care to investors. So anytime that investors has any issue with their investments, right? Obviously, their first port of call is to get their consultants, failing which, if they think there's something not right with their investments, they should always call us. So for example, if you go into our website, aminvestment.com, you will see for contact us. When you go to contact us, there's actually another ticker that you can actually click, right? And it says dispute. So we line up very clearly in the event if you think there's a problem with your investments, right? And you click that, we detail in properly what you should do. And this is where SIDREC and FIMM comes in. We actually detail and tell the investors what they can do and who they can actually complain to if we, as an asset management house, fails to resolve their issues in a reasonable manner. So the first thing that after talking to us and they feel that we are unable to resolve the problem, then they should obviously contact SIDREC, right? Lodge a complaint with SIDREC. Then they can also lodge a complaint with FIMM. Okay. And if they want, they can also lodge another complaint with Securities Commission. So these are some of the things that investors can do, right? And maybe just to give a bit more colors to investors, right? Anytime if you have a problem with your investments with the unit trust, when you contact SIDREC, you contact FIMM, or you contact SC, okay, and when the regulators comes back to us as an asset manager, and I think Regina will agree with me. I hope you agree with me on this. It becomes a very big issue for all the asset managers' house, because each time Securities Commission calls us, immediately the whole matter gets escalated, not only to our EXCO, which is the executive management, right? It also gets escalated to our investment risk, operational risk forum. We get escalated to compliance, and they get escalated to audit committee, investment committee, and in return, all the way up to the board of directors, right? So this is a very big thing, especially for investors, that, why you should actually buy from regulated asset managers,
Yes.
right? Because the protection is there, right. That, Securities Commission deem and makes it fit that, all the investment control compliance are all in place in all the asset managers in Malaysia, so that, we cannot suka close shop and disappear tomorrow. Yeah.
You can't.
Yeah.
I also want to share with the participants here that in the event there is a complaint to FIMM and the complainant is qualified for assistance by SIDREC, that matter is also referred to SIDREC, yeah, and then the complainant is informed. So before we move on, Mr. Chung, can you quickly share with us what are the other warning signs of investment scams that the participants here must watch out for?
Okay, I think the gist of investment scams is quite simple. I think all of us have spoken about it, which is high return in a very short time, right? Regular dividend payment or regular income, right? And the third one is guaranteed return, right? So once you have a variation of all these three, right, then you should actually have to be careful, right? Then the next one is it always play on your emotion, like what Regina mentioned, right? Our desire to make good money. And obviously this is not help when, we always have friends telling us, hey, I invested in Bitcoin and now I'm making 5 times over, or I invested in Top Glove and it makes 5 times prior to this, obviously, right? So we always have this desire to make good money, and that's reinforced by friends telling you stories about that. Right. So you need to be cautious. You need not to be pressurized into making investments, because that's the other thing, which is it's always time sensitive. If you don't invest now, you will lose the opportunity. Okay? So this is another very classic scheme, right? So the third one is like what Puan Shamila and Puan Salawati has pointed out, which is to make sure that go through all the websites, especially from the regulators, to make sure that the websites that you are looking at is a proper website. But one thing that I also want to add to that is there's also something called a Google Transparency Report, right? So if you type Google Transparency Report, right, and you type in the website that you wanted to go, Google actually does have an algorithm that tells you whether that is a proper website. So that's another way for you to check as well. Yeah.
I also want to share with the participants. I was so surprised that I was notified on my phone when I had 2 missed calls that it is a potential fraud. So sure enough, when I Googled it, it was an alert from the police. I don't know how that works. I didn't pay for that service, but it was indicated that potential fraud. So that helps me, isn't it? Now that will bring us nicely into our Q&A session. I have a number of questions here. And the first one I want to cover is, will the authority take action after the victim has made official report? As far as I know, there is no action from the authority. I think Salawati, you can take this question.
Okay, thank you for the question. I think the question is quite general, which regulator that you are looking at, but I can probably share about how FIMM looks at all the complaint cases. I think it's a matter of time. Because we need time to investigate, we need time to reach out to the relevant parties, including the companies. There are times where we try to reach out the complainant doesn't give cooperation. They don't have any supporting documents for us to go through. Also, we have to reach out, to be fair, to the alleged person to find out their side of story, because for us, we cannot take sides. We have to be fair in making our judgment. So just rest assured that whatever complaints that come to FIMM, it will be investigated, it will be dealt with, and you will hear from us. But the only thing is a matter of time. But if the complaint comes at the onset, we surely are going to acknowledge your complaint. So that means we are looking into that. Only when you don't get our acknowledgement, then perhaps you can say that probably we don't take action. But certainly, if we have already acknowledged, we are taking action on that. So, and you can see from our website, the number of consultants that we have taken action on. So just to share, in 2020, I think we took 20 reprimand actions against 20 consultants. So these are all reported in our annual report anyway. Thank
The
you.
complainant also is encouraged to follow up. If you don't have response, you can always follow up. You can call, talk to some officers in FIMM. The next question is still for FIMM, for Salawati. Can an UTC or agent report to FIMM another UTC or agent selling unauthorized financial products? If so, what channel is available?
We don't limit in terms of who can report or who can't report. We do have instance where another consultant give us tips or complain about another consultant for their misbehavior, and there were actions taken on that particular consultant. So as I said, we don't make a distinction in terms of who report. Whatever that comes in, we will evaluate on the merits of the complaint. And the supporting documents that are on the complaint itself. So yes, do that. You can also be our tipper for us to make the industry a better place.
The next question is for Ms. Regina. How do you tell apart a private equity investment scheme from a Ponzi scheme?
Well, that's a tough one. But whatever it is, if it's a private equity scheme, a proper one, it will definitely, there will be a proper entity. And I think the key thing here in Malaysia, which I'm seeing, is that a lot of this, dodgy scams actually purport to be licensed by the CCM, the Suruhanjaya, the Companies Commission of Malaysia. And then another way of also trying to get to you is by claiming to be Sharia compliant. So they'll have a Sharia compliant advisor signing off or something like that. So unless you actually call the Sharia advisor, a lot of people will take it at face value, right? So in regards to a proper a Ponzi scheme and a proper private equity entity, is that a private equity entity would be regulated, so by the Securities Commission as well. So you don't have to worry about that. So as long as it's actually regulated by the Securities Commission, and then you've got all the other regulators involved, then it is actually proper. Just because it's been set up by the CCM doesn't mean that entity actually has the authority to actually take monies from you. So I think that's very, very key, because just because that entity has a name, the Sdn Berhad might have a name that says asset management or whatever, doesn't necessarily equate to that entity actually being able to actually take the money. And that money should also be in a trust account. So whenever you make an investment, I think the key thing is also to check on the bank account name. If there's no trust account there as well, you might want to double check as to why, because the guidelines would be very, very specific that you've got to have it in a trust account, which means that there will be a trustee involved in taking your monies. Thank you.
The next question is for Mr. Chung. How can we deal with UTCs during this pandemic? I don't think they want to meet with the agent at this moment. Can all transactions be conducted online?
I don't quite understand the question, Madam Koi.
Your unit trust consultants, are they interacting with potential investors or investors online rather than seeing them face to face?
Generally, I think the whole industry follows the government's directive or SOP. Of course, some asset managers are more conservative when it comes to the SOP in terms of meeting clients. Okay, but generally, when it comes to the SOP in terms of meeting clients, right? Whether you meet the consultant online or meet face to face, I don't think it's an issue in terms of the transaction or in terms of investing. The only thing that I would caution is that sometimes people will say two things. One is you might have to pay for digital signatures, which some people might not be keen, right? So the flip side to it is, I think some consultants, which is probably not so common nowadays, is they actually ask some of the investors to pre-sign forms so that it's easy for them to do transaction, right? Again, I reiterate, please do not do that. Do not pre-sign any forms until you are certain you want to do it. Because once you pre-sign certain forms, sometimes you don't know what the consultants or your advisors is going to do with your investments.
I suppose sometimes consultants find it difficult to get the investor's time, especially an investor who is working, an executive. So to avoid that, or the investor is working abroad, and when they see them, they will ask for many forms to be signed or thumb printed. Yeah, but that is also to be avoided because it is not so safe. Yeah. Now I have another question is from all the questions are anonymous, I think. Will FIMM or SC set up a cybersecurity team, as lately there are many scams involving licensed intermediary being hacked or websites replicated? Salawati.
I was hoping that you don't call me out, Madam Clyde, on this question. Okay, so if you look at our role as an SRO, we are, the scope that we are looking at is regulating unit trust and private retirement scheme. So cyber security, I would think that is a bit much bigger picture. And, you know, if you compare that with the scope that we are responsible for, so I would think that SC, even at the SC side, they would have something on this, and even MCMC, they work closely on that. They collaborate closely with MCMC looking at all this. So I think we are trying to minimize in terms of an overlapping of oversight. So if you look at cybersecurities, it would fall under MCMC and per se. So let's not get everyone to be just looking at one area. Let's diversify so that we hope that we focus on various areas that we need to look on, and we support each other and complement the work that we do with other regulators.
Yes. Next question still for you, Salawati. Scams are active on social media using influencers, etc. What is the role of FIMM or SC doing in monitoring this development?
Okay, so I think it was also a question that was posed earlier on. Just to reiterate the point, in FIMM, we do have a unit that looks at the social media, but there's so many postings out there. We use crawlers to sift through all the messages, posting that were done. Of course, those that are regulated by us, I think as what we have said earlier on, we are only looking at whoever that is registered with us. So we just make sure that those people do not post any malice, information about the product, whether they misrepresent or whether there's someone who actually, they fake their identity and to say that they are consultant. So these are the areas that we already look at. I think even tomorrow there's a section on social media surveillance as well that we have embarked on. And also the areas that we have discovered for the last 1.5 years. So I think probably is a session you may want to pose another question during that session as well. So, but just yes, we do surveillance on social media.
Thank you, Wati. Now we have a question for Shamila. Is there a fee for the services offered by SIDREC for investors?
So no, but it really depends on the amount of claims. So if the monetary claim is below 250,000, our services are free for the investors. If the monetary claim is above 250,000, there is a reasonable charge.
Okay, that is fair. Now the next question goes back to Wati. If we see suspicious activity or scam made online, how could we report this to FIMM?
So I've shared a link on FIMM in terms of the unauthorized, where you can verify the checks. You can also go to our website, which I've already shared in terms of what our website address is. So you can go there, you can lodge a complaint in there, or you can even, as what was mentioned earlier on in the earlier session, you can go to info.com.my.
This question, let's see any of the panelists want to take this up. In the event of a scam, from experience, will we ever get our money back after we report and investigations are conducted? Mr. Chung, you want to give it a try? Or is it Regina? Regina?
Yeah, actually, I was going to say that I think as long as you've got the necessary receipts and all that, and I think if the authorities are able to make a case, then I think then you might have some chance of getting back. But I think the key thing is, a lot of the scams out there are unlicensed, unauthorized. So even though we do have FIMM and SIDREC, I think the key thing here that most people, the participants here that should know is, I would advise that you should always invest in unit trusts or regulated investment funds, because once it's with outside that ambit and it's not regulated, that's where if you lose money, it's going to be very, very difficult. And, to make a case, even if there's a police report done, the chances of actually getting, that case being brought to fruition is going to take a very, very long time.
And also these unauthorized investment operators do not keep proper records. They take your money, they stuff it somewhere. You remember Pak Man Tello, those days? His whole house was full of cash, but he doesn't keep records. Just memory. He remembers who has invested and who has not. But upon investigation by the police, how do you prove that you have invested?
Yeah.
So bear that in mind.
Yeah.
A final
Madam,
yes.
if we take the Genoa case,
Yes.
scam as an example, the authority, Bank Negara, took them to court in 2012. Okay. The decision came, I think, they went to the Court of Appeal came decision in 2020. So in total, it took them 8 years to find them guilty. Okay, and the court decided to fine Genoa about 450 million ringgit. Okay, on the return back to investors, generally the court says that the investors will have to sue the company on a civil case because it wasn't a regulated investments, right?
Yes.
So you can basically pick your pick. Like, there is probably about estimate of 35 to 50,000 investors. Okay, so offhand, two things. One is the amount of time you're going to recover your investment is going to be very, very long. And number two, if the scammer is worth their salt, I don't think you'll be getting back any of your money. Or even if you are getting, it's going to be very little.
For your civil suit, you need to expend money to recover bad money.
Yes, yes.
Yeah.
If I can just add, there was a case back in 2006. This is about Swiss cash. So it was a Swiss cash saga in the past, which action was taken by the SE. So from there, basically, I think the losses was hundreds of millions, but they only managed to get about 31 million settlement. There were 29,000 or close to 30,000 who claimed for that amount, but only 19,000 or about 20,000 eligible for it. So to answer your question on whether you get the amount, potentially depending on whether, one, were you actively involved in recruiting or in promoting the scam.
And making money out of it too.
Correct.
Commission.
So if you are, chances are you may not be eligible. Two is chances of you getting the whole sum is quite slim. So in
Yes.
this case, it's probably what, 70% or even less than that. Thank you.
One final question, I must not leave out this last question. Is there any website or regulators for us to cross-check regarding the validity or licensing for any private equity? Iwa, you want to answer this question?
Unfortunately, I'm not aware of any websites that
On
we can
private
use to check
equity, yeah?
private equity. Yeah, terribly
Yeah.
sorry.
Yeah, I don't think there's one also. All right, that brings us to the close of our Q&A. Now, the rest of the time is for each panelist to share with us their final takeaway from this session. Can I start with Shamila?
Okay, sure, quite. So I just have two part of the key takeaways from today's session. I would say number one is, yes, the onboarding of investors into an investment product is very important. So please, my advice to retail investors out there is to really sit through with your consultant in terms of your investment suitability assessment, because if you do have a claim with against your capital market intermediary and you file it with Sidrec, that is something that we very closely monitor to see whether there is a cause of action. The second one is, of course, can't stress this enough, probably to the point of nagging. Please, when you're investing, go with a registered entity and licensed entity. Yeah.
Yes, that's sound advice. Wati, next, please.
Okay, so for all of you who attended today, please be our agent to spread the words so that none of us or your loved ones actually fall prey to this scammer. So before I leave this session, let me recite 2 pantun for you, okay? So bukan senang nak jadi kaya, perlu ilmu untuk elak petaka. Janji lumayan, jangan terpedaya, itu semua bohong belaka. Scammer ada setiap masa, jaga desire dan juga emosi supaya tidak menjadi mangsa, duit hilang tanpa terisi. Thank you, and back to you, Madam.
Thank you, Wati. That was nice. Regina, please.
My takeaways is, yes, definitely, like I mentioned earlier, you've got to go with the registered operators, because they've got the whole infrastructure here to safeguard your monies. You either have the SC, the FIMM or SIDREC, and then of course from the banking side you've also got Bank Negara. So that's the key thing. And then always don't be in a rush to make lots of money quickly. So I think you need to forget about the emotions and actually put on your rational hat on and actually really ask the right questions. And also take time to go through the SC website, because actually it's got a lot of information there. It also lists the list of products that's actually been approved. So there's a lot of resources, and it's Google is actually a fantastic way of double checking that information that has been given to you. Thank you.
Yes, Iwa, the last panelist.
About if I think the takeaway for me is that it's very difficult to make money, and it's very easy to spend or lose money, especially through investment scams. Right? So my takeaway for this is really, whether you like it or not as an investor, you really need to do your homework. You need to do your monitoring of your investments, because in most cases, nobody is going to take care of you except yourself.
Correct. Yes. I have been a long-term investor in the unit trust industry since the 80s. That's how old I am, and continue to do so after my retirement from full-time employment. I trust the participants here will also become happy and satisfied like me to invest in unit trusts. And for this session, I hope that this session has prepared you to respond, to invest productively, profitably tomorrow and beyond. And finally, I would like to thank the panelists, Puan Salawati Mustafa, Ms. Shamila Sharma, Ms. Regina Rahim, Mr. Chung Yiwa, for sharing their valuable insights on investment scams and fraud. Thank you very much, everyone, for spending time with us in this session. I trust you have enjoyed and benefited from participating in this session. Thank you very much, everyone. Take care and goodbye.
Thank you.